So we are here again because we want to go through the SBR pilot set 2 questions. And in this lecture today, we'll be looking at question 1. Question 1 focuses on Apapa PLC, a parent company that owned 85% of the ordinary share capital of WAF PLC for some years. The shares were bought for 255 million naira, and WAF's PLC's reserves at the time of purchase by Apapa PLC was 20 million naira. On February 28, 20x3, Apapa PLC sold 40 million of the shares of WAF PLC for 160 million naira. The only entry made in respect of this transaction was the receipt of cash, which was credited to investments in subsidiary accounts. No dividends were paid by either entity in the period. You are provided the following information: statements of profit or loss and other comprehensive income for the year ended 31st May 20x3 for Apapa PLC and WAF PLC. We have profit before tax 130 million, WAF PLC 60 million, income tax expense Apapa PLC 40 million, WAF PLC 20 million, profit for the year 90 million for Apapa PLC and for WAF 40 million, other comprehensive income net of tax 20 million for Apapa, 10 million for WAF PLC. Total comprehensive income for the year 110 million for Apapa PLC and 50 million for WAF PLC. We're also given the statements of financial position as at 31st May 20x3, and the statements of financial position shows that we have two side-by-side figures for Apapa and WAF. We have non-current assets, we have current assets, we have equity, we have current liabilities, and our total assets are equal to total equity plus total liabilities. No impairment losses have been necessary in the group's financial statements to date. You are to assume that the gain as calculated in the parent separate financial statements will be subject to corporate income tax at a rate of 30%, and that profit and other comprehensive income accrue evenly throughout the year. Apapa PLC elected to measure the NCI in WAF PLC as fair value at the date of acquisition. The fair value of NCI in WAF PLC was 45 million at the acquisition date. No control premium was paid on acquisition. So that means that we are not expected to account for any increase in share premium arising from the acquisition of WAF PLC. You are required to prepare the statement of profit or loss and other comprehensive income and a statement of changes in equity. That is the total amount, the total column only of Apapa PLC for the year ended 31st May 20x3. The examiner also wants us to prepare the consolidated statement of profit or loss and other comprehensive income of Apapa PLC for the same period. The examiner also wants a consolidated statement of financial position as at 31st May 20x3. Lastly, the examiner wants us to prepare a consolidated statement of changes in equity, that is the total column only for the year ended 31st May 20x3. This is part A of the question for Apapa PLC and WAF PLC. So as not to waste so much of our time, let me now go through the line by line explanation of what we are expected to do. In the first instance, this question is testing two different things. The first aspect that this question is testing is that the question is testing the student's knowledge of separate financial statements. When we look at what the examiner wants from an understanding of separate financial statements, you will ultimately see that the examiner is looking for something that will make the students have to prepare revised financial statements as a result of the additional information given in the question. This also brings to our notice the fact that when we talk about preparing the financial statement of a separate entity, we need to understand some basic rules. And remember that we already talked about these basic rules in our previous lectures. We said that some of these basic rules include accounting for omissions, accounting for commissions, that is, errors of omissions and errors of commissions in the various financial statements. In this question, the examiner is very clear as the examiner is looking out for three financial statements, which include the statement of profit or loss. I beg your pardon, two financial statements, which include the statement of profit or loss and other comprehensive income on one hand, and a statement of changes in equity on the other hand. However, for the statement of changes in equity, the student is not necessarily supposed to break down the equity components. The student is just supposed to just tell the examiner the various the two aspects which include or which are, as always, which are simply the group and the NCI. The Sorry, I beg your pardon, for the statements of changes in equity, all the examiner is asking for is the total column. So if the examiner is asking for the total column, then it implies that we do not need to break down the components of equity as we would have broken them down when we were preparing the consolidated financial statements of Apapa PLC and WAF PLC. So, having said this, I think we are okay, and it will be wise to just go straight to the point. Now, going straight to the point will require that we start from the very beginning. And in that very beginning, we are told that first and foremost, we have to prepare the statement of profits or loss and other comprehensive income for the year ended 31st May 2020, 20x3. And we have to go back to the financial statements. Going back to the financial statements of Apapa PLC, because that is what the examiner has asked us to do, will mean to start from the very beginning, and that very beginning is profit before tax. When we talk about profit before tax of Apapa PLC, the profit before tax of Apapa PLC is 130 million naira. So that has not changed. And we call that line item profit before tax before gain on disposal of shares in subsidiary, 130 million naira. Then we were told in the question, if we look again in the question in the additional information provided, we were told that some shares were disposed, and and these shares that were disposed for 100 million naira. So let us now look at that information that we're given. If shares were disposed to the tune of 100 million naira, then that means that we have to account for that disposal. But then let's quickly look at what exactly happened that helped us to arrive at that fact that those shares were disposed for that amount.